Hey everyone, welcome back to another episode of Market Watch. We got a great episode here showing you guys lots of great areas of value, so stay tuned and get ready as we dig into Market Watch episode 3. Hey everyone, welcome back to Market Watch episode 3. It's a new week and new beginnings in the Forex market, so let's dig in and see what this week has in store for us. Taking a look now, firstly at the DXY. On the daily chart, we can see that we've had some continuation after the breakout that occurred earlier last week. My new point for resistance on the DXY here is going to be labeled out at 97.80. We can see that over the last few months, the market has acted as some resistance and support off of this area of value. So I'm thinking that if we're going to be moving up this week to that area, it's going to be our first area of resistance. We could also see a pullback all the way back down to our trend line to act as support. But we are going to see some volatility here on Wednesday as we take a look at Forex Factory and we see that the FOMC announcement is set to come out. Now, with this in mind, I am going to be cautious as we get closer to this news announcement date. I'm going to be making sure that I'm going to be using smart stop placement, and I'm going to be locking in some profits of some of the trades that I have currently running. I'm currently long on the US Canadian. We'll go over that here shortly, and I'm still holding my position from a few weeks ago of being short on the euro dollar. Taking a look now at the euro dollar again on the daily chart, I want to take a big picture look of what's been going on in the market over the last little while here. Doing what I always do at the beginning of the week, I like to take a look at where my areas of support and resistance are going to be this week. And I've highlighted the area of 1.0835 for being my first area where I'm going to see some possible support coming into play here. My bias is still short on this, and I'm still holding my position from 1.1150. But as coming into Wednesday's FOMC announcement, I'll be looking at placing my stop at the last swing high that has been formed by that time. So let's take a look now closer on a 4-hour and a 1-hour chart, as we will see some different areas where we could possibly be looking to be placing that stop if we get some new swings occurring. So right now, I'm still holding my stop at my entry position, so I've now bulletproofed my trade. But as coming into that Wednesday's announcement, I'm going to look at bringing it down to possibly around the 1.060 area, or if the market continues to trend down farther, I'm going to be looking at placing it on a new swing. So even taking a look at the hourly chart here, we can still see that that area is really good here, right? It's not quite the last swing high on the 1-hour chart, but it's still going to give us some good room. So when that news announcement comes out and there is some volatility, I'm going to make sure that I have some profit locked in, but I'm also going to give myself a buffer area where I know I'm not going to get stopped out from the volatility in the market, as I am still presuming overall we're going to see this pair head a little bit farther. Let's take a look back now on the daily chart, where I'm going to be telling you guys what my first overall target's going to be. I'm going to be coming up a little bit shy at the 1.0866 area, which is going to give me a nice 1 to 5 risk to reward. I'm going to be holding on to this trade though. I'm not necessarily going to be closing it out, but if I do see that it does run into where it looks like we could be having a pullback, where we are seeing support coming off of that area, I will look to close down my position, wait for the market to possibly pull back, and then look at adding into another position. So let's move along now to our next currency pair. Taking a look at the weekly chart of the US dollar and the Canadian dollar, we can see that what I've been talking about for the last 2 weeks here has really come into play in the market. We closed last week with a very strong bullish engulfing candle, and we are playing off of the momentum occurring with that starting this week. Yesterday, taking a look now at the daily chart, we see that we had a really good day yesterday. We've now well broken this downward sloping trend line, and I'll show you guys exactly where I got into this pair and where I'm hoping to manage it. Taking a look at the hourly chart, I'll show you guys exactly where my entry was on this pair. So initially, I was very calm and patient. I did see that the market broke out of this downward sloping trend line, and then it came back and went well below where I thought it was going to be. So I was waiting patiently. From there, the market rallied up really hard and didn't give me a very clear entry. So I was still calm and patient and waiting. From there, the market did pull back to the pivot, where was my area of value that I was waiting for. So I saw a really good rejection along that pivot line where the price was holding very well for a long period of time, for a few hours there. So my entry on this pair was at 1.3130. My stop loss was 80 pips down at 1.3050. And I'll show you guys exactly where I'm looking at possibly taking profit. I do have two areas that I'm looking at right now, one at 1.3300 and one at 1.3400. The reason why my major target is at 1.34, but we could see some possible resistance come into play, as this area here that we've seen before has acted as a strong area of resistance. But my overall bias is that this pair is actually going to go a little bit higher than that. So I am just going to be watching and managing this. If I can get to my area of 1.34, it's going to give me a risk to reward of about 1 to 3.2, which is really great. If I don't quite make it there, I should still be able to get out a nice 2-to-1 risk to reward. Taking a look now at the US and the Swiss franc on the daily chart, we can see that the breakout that I've been talking about has finally occurred after the last few weeks here. I'm not really getting the result that I quite want. We can see a bunch of these high test candles starting to form. We're getting some consolidation forming here just across the top of our support area. Let's take a closer look and I'll show you guys exactly where I got in and why. I'll show you where my stop is, and I'll show you my overall bias of where I'm thinking this is going to be going higher. So moving into the hourly chart, we can see that we did get the break and we did get a retest right here of that downward sloping triangle, but I didn't quite get that entry, so I waited calmly. The market then continued to trend upwards, and we actually had a pullback where I saw a good entry off of this doji candle, this deceleration at the area of 0.9845. I have my stop nice and a nice big stop here. It's a 50 pip stop, which is well below the last swing low here, and actually below this upward sloping trend line as well as this downward sloping trend line. So in here, this is acting as my area of support, and I should have my stop nice and safe below this. My idea is to actually take out the top portion here, which is going to give me about a 1 to 10 risk to reward. So I am looking at holding on to this trend long term, even if I have to hold on to it for a period of a month or a month and a half. If it will still continue to trend in that direction, that will still give me a very, very good healthy risk to reward, and that's actually my monthly target of 10%. So holding this trade over time is going to pay off. So let's take a closer look at another pair here now. Taking a look now at the pound New Zealand on the daily time frame, we can see that this period of structure starting to form within these pound pairs really starting to take place. We also had a great rejection off of this pair at the area of 1.9080. And if we take a look at the bigger picture of how significant this area is, we can see that it really starts to play out, over the last 5 years, if not even longer. We've had some really, really great support off of this area, which has now turned into resistance. Taking into play this really long-term downward sloping trend line, we also are coming up to this really good area of value where we're predicting this awesome rejection. And we can see, playing off of what happened in the last few days, is that we did get a rejection from this area, and I am predicting that this pair is going to head lower long term. Let's take a look at a closer look of some intraday charts of how we could possibly time a good entry on this. We can see here on the hourly chart of the pound New Zealand that we've been in an uptrend here for the last few days, making a series of higher highs and higher lows. But it now seems like that we're about to reject off of that area of value that we were just talking about and make a lower high. From there, we have this upward sloping phase line that it seems like we are about to break, as we're having a great rejection off of today's pivot area. From here, my entry is going to be just below the phase line at 1.8725. My stop is going to be nice and safe above my R1, sitting at an area of 1.8926. And I'm going to be looking at taking out the area over here at around 1.8. From there, this trade should give me a nice 1 to 3.5 risk to reward. And I may even feel more comfortable taking this trade, holding it a lot longer, as my overall bias in the market is actually very short the pound, as this could go much lower. Let's take a look now at US oil. Looking at US oil on the daily time frame, we can see that we've been consolidating between this area of $50 a barrel and $44 a barrel. I've been talking about for the last few weeks of seeing a rollover happening within oil, and it now seems like we have just broken below that key support at $44 a barrel. We can see that in the past, this has acted as support across many different areas, and now that we've broken that, it seems like oil could be heading quite a bit lower, as it could possibly head back down all the way down to the next area of support around $38 a barrel. This would coincide really well with the US-Canadian trade that we have going on, showing that as the value of oil goes down, the value of the Canadian currency is also declining, as oil is a major export for Canada. Thank you all for participating in this week's Market Watch, episode 3. Hope you all got really good value out of this. Watch out for those key areas in the market. Be very careful and make sure that you have your positions covered for the FOMC news announcement here on Wednesday. And I hope you guys have a great week. Stay safe in the markets, and we will see you this week on GoTV, and stay tuned next week for the next episode of Market Watch.